the solid platform that people use. I don't think that there's anything wrong with it. It's not quite, I don't think it's quite Robinhood at this point, because Robinhood, you have to remember, they offer so many other things right now. They offer, it's, people put money into it because they give back pretty good APR. They have the prediction markets. They have a credit card. They have, so much more associated with Robinhood markets right now. And Webull, as much as it is a competitor, is missing a lot of those things, right? So until they develop more stuff and they become preferred in ways, like Robinhood's going to have most of that market share so far. So be careful with this. I would say if it comes down toward the $6 range, I'm sure we're going to hear a lot about people trying to grab shares for the long term. So keep that in mind. Silver dropping. So I would say here, if we see a gap fill on this, like maybe we go up again and then come back down, fill the gap, maybe dip a little lower. I could see this coming back up. I feel that right now with the way that the markets are set up, we've got money printing right on the, right on deck. We're about to go into that. We've got the big thing right now, I think, that is causing a lot of our markets to come down has a lot to do with interest rates. The government reopening led to a kind of a question mark around whether or not we are going to bring interest rates down. So if we don't bring interest rates down this next cycle, so December was basically a lock a little bit ago. It was basically said 90-something% we're gonna lower rates by 25 basis points. Now it's looking like half, actually. Let me really quick do that. Summary of economic projections. Let me find the dot plot. Where is the chart? CME Fed Watch. There we go. Okay, let me share this with you guys. I'm going to post the link in here for you so you guys can see too. So this is called the Fed Watch tool. So this is for December 10th, which is coming up. Target rate possibilities. This is holding it steady where we're at. This is the chance that we're dropping it. So as of right now, we're actually more likely now to possibly just hold interest rates steady is what they're saying. Okay. Now, a month ago, let me see if I do this. A month ago, yeah, that doesn't help. Basically, a month ago, it was like 90-something% that it was going to drop. Not even a whole month ago, like 2 to 3 weeks ago. This was at 90-something%. So now there's a very high possibility we might hold interest rates steady. What does that mean? You want to think of easy money versus more, difficult money. Easy money meaning that it's easier to borrow, easier to flood the markets with more liquidity. That would be lowering the interest rates. So as of right now, this is, I think, where a bit of the scare is coming in. That's why we're seeing markets relax back down so much, is because up here, we were expecting that we're going to cut interest rates. Money's going to be easier. Market's going to keep going up because of it. Now, because we're not expected to cut it, that's why we're seeing it kind of, come back down to the median, come back down to the average, and slow down. But QE, quantitative easing, is supposed to be back on the table. So I think, silver, gold, I would expect that you look down 6 months from now, those will all be higher. Very unlikely that you'll see them come back down too far. So MU MU's been doing great. Um, my question for this is more so when is this rally gonna kind of end? It's starting to show a little bit of exhaustion up here. So MU might be something where we might want to consider the downside of it because since earnings, it's just run up. I was checking this from earnings till now, it's up over 50%, which is ridiculous, right? It just keeps running up higher and higher. The good thing for MU is it still hasn't broken below this trend line, but I would be cautious when that does. Right? It's found kind of a top right here. So be careful there. If it can continue to chop around here, I would say maybe retest, but right now with how things are going, it looks like there's more of a possibility of it coming down. So I would play the trend line maybe if you want. Hit trend line, probably see a bounce. That would be a small play to consider. It could definitely peak down below a little bit to fake some people out. Um, yeah, it's just memory demand. MU, STX, SanDisk, those have been running really hard. So here's the interesting thing with Google. There was a report on how Warren Buffett, he's retiring, but this was his last play. So overall, when you consider like indicators and all that, Google is super high up. Google is at an area where most people would say, okay, it might be time to consider selling. This has run up so hard, right? Consider it from March of this year. We saw, and this is up 100% from there. So Google's had a very strong run. Now, it is one of those companies and one of the biggest companies in our world that ultimately, it's hard to say because this really could keep going. Okay. It peaked up to all-time highs, right? And it's come back down. I wouldn't be surprised to see it come fill this gap it just made. And if it fills that gap, we'll see what direction it goes. Overall, markets are very, very cautious right now. But the theory behind this one is that, well, Warren Buffett just bought a bunch of stock in Google, so he's got high hopes for it to continue going up, right? Is the AI trade over? Are we just getting started? There's a lot of conversation in the wind about that. I don't think anybody knows the real answer to this at this point. It's all speculation. There are a lot of warning flags that have popped up, but again, they can no warning flag those warning flags could play out down the line. It's extremely hard to time when exactly this might happen. So that's what I would be careful with. The thing that's really been alarming is right now Bitcoin had this charted up over the weekend. We'll make an adjustment to it in a moment. But Bitcoin, I basically told you we're going to come down toward this 94 range, which we did. We bounced just a little bit, not really that hard, actually. Bounced just a little bit. Now we've come back down. Now we're at 91K. So um, there is a theory here that they're going to try to make an example of Michael Saylor and strategy. So MicroStrategy is heavily leveraged with Bitcoin. Um, Michael Saylor says his cost average is like 10K, so it could go down as far as that. I think I don't know. I don't necessarily believe it. I think around like 60K or something like that, he's gonna start getting liquidated. There's already signs that his company is over leveraged in Bitcoin. So my range is that here we have a lot more demand down over here at 85, maybe high, 88 would probably be the start of it. So if I were to take this and redraw it now, I would say next path we have maybe a bounce here, but I think we're coming down to this range here. I don't think Bitcoin's done coming down. I think Bitcoin's going to come down even further. There's a possibility this is one of the first ranges we could see, but then we also have this next range, basically where everybody's been trading. This would probably be the bigger possibility of a bounce right here. All right. So be careful with it. Another signal that I would say right now is take a look at what's coming in today. Usually we'll see, we'll see a lot of trading for bulls and bears on SPY, but here we've got nearly 5x what's being bought in puts. So puts $380 million in puts for SPY versus 66 million calls. So they're definitely, hedging against all this. There's definitely protection being bought, and there's a lot more common sentiment of that. Hey, I think we're headed down further right now. We're in a distributionary phase of the markets after running up so hard. Okay. Retail expectation is that markets just keep going up, so keep buying the dip. But institutions are starting to get a little bit more weary of the fact that, okay, we could just come back down from this. Everything's overvalued. There's a lot of signals of how some companies are making all-time lows while only a small handful are carrying the markets to these all-time highs. So I would say be careful. Keep an eye on this. I definitely think that SPY and QQQ have a bit more to come down from. So here's my chart from it that you guys have seen. Time to update it because this basically played out. I had this, if you kind of scoot it over, bounced over here, went a little bit lower. So let's add to that now. My lower end of the range right now is that we could see as far down here around 655, maybe even 650. There's a lot of people thinking, okay, we're going to see a black swan event type of thing. So even so here, this might not be that strong of a bounce. This could maybe just come back down to one of this previous trend lines. The positive thing about where we're at right now is that right here, we've already bounced 1 time, 2 times, 3 times. So this is another possibility. We could see a bounce here. It is kind of hard to tell because right now, everybody's fearful. I posted this in my channel earlier today or yesterday. We have a couple key events this week. So today, Fed manufacturing data. Wednesday, we have Fed meeting minutes. We have NVIDIA reporting on Wednesday, which is a huge deal. It's basically the Super Bowl of the stock market. September jobs report on Thursday, Philly Fed manufacturing data on Thursday, and October existing home sales data on Thursday. Okay, so a lot of data coming in. So, one of the other points of data that did come in is that transportation. Let me see real quick. I had it up here. U.S. October freight shipments fell to the lowest level since 2009. So, supplies are flowing at one of the lowest levels that we haven't seen in, the last 20 years, basically. So that shows that there are cracks in the system, tariffs and all of this trade war that's happening. Like straight up, we're in a trade war. That's what it is. It's starting to create havoc in the system. Okay. So bulls will definitely want to see this reclaim and come back up. We did see a pretty strong move to the downside, just today. We've seen quite a few of these over the course of the last few weeks now. So it's just showing that bears have a bit of momentum right now. As I've said, once they turn on the money printers, that money will flow into the markets and we will see some strong bounces. The question is it going to be enough to push us to all-time highs now? And again, we are in some pretty fearful territory. So CNN, fear and greed. We're at a 13 right now, guys. Okay. If I were to just use this as the gauge, this does mean we're closer to a bottom than most people expect. There, more recently I've had and noticed some people saying this entire gauge is broken. But when you go take a look and you kind of, let me see, we can take this in a timeline, right? And I'm going to screenshot this. I'm going to take it and I'm going to overlay it onto my charts. So give me one sec. Okay. Let me do this. I'm going to use SPY. Or not SPY, SPX. Yeah, I did this more recently too. Let me resize that. Okay. So this is through from January, right? So we can see January is right here. Okay, so if I mark this here, gotta stretch it out. Let's do that. Stretch it out. That looks close. It's going to be off by just a little bit. Okay. But so we got January here. So look at these. This first big dip right here, you can say is this right here. Okay. This big dip here, definitely correlated to that April tariff tantrum. Okay. Now, what we're focused on here is that on this chart, everything down here is where we have to be. This is the fearful, extreme fear range, right? Under 25. What happens every time we come down under 25? We see a strong bounce back up to the upside. Okay. So we're right there right now. Keep in mind, though, once it hits extreme fear isn't necessarily the time to start buying just yet. A lot of times we can come lower. In April, our fear was down to, I think, like 8 was the number I saw. We're at 13 right now, which is pretty fearful. Extreme fear. I could still see this probably coming down just a little bit more, which is why my charts as of right now for SPY, that's why I have it saying, okay, well, my lower end of this, this would be the lower end of it for now, probably toward the 655 range. Now, when I draw these curves, that's basically to say, like, that's where I put the lower end of the risk. Remember, though, it doesn't always just go straight down. So it could like bounce around and then come back up. So I would probably put this as where the risk is for what I see today, right? One thing about markets, and you have to be able to adjust your strategy as data is released, as new announcements are made, etc. I saw something yesterday that said that Trump is putting like 500% tariffs on anybody that deals with Russian energy, and China does, follow along those lines. There's supposed to be a deal with China made in the next 2 weeks or so. So I just feel that there's, we're entering into that uncertainty phase again, and that's what's really caused markets to struggle in this range, in this area. One good thing to do as well is to go back into what happened not just last year, but we had uncertainties and we had this type of behavior multiple times in the past, right? So back in 22, right, we saw this drop over here, 26%. if I were to take these copy these bars over, where is it? Weird. Thought they were on here. There we go. So if I take this pattern, let's just copy it roughly, bring it to where we're at so far. Kind of minimize it a little bit though. So, that shows that there still is a possibility we come back down, even toward like, I think 610 would, no, something big could happen. Right now, I think the risk would probably be an announcement of us going to war with like Venezuela or something like that. See it come down and chop down toward about 610, 600, and then come back up from there. So, a lot of uncertainty right now. Okay. A lot of uncertainty. Said Apple. Apple did break down a little bit. There is a gap right here to consider. So basically what I drew, maybe now happening. Come down to lower range and then pop from there. This is where you need to understand, like the good companies that have, that are going to continue to make money, that are continue to stack their cash flow and things like that. They'll be just fine. It's going to be the companies that are pre-revenue, the ones that are bleeding money, that were built all upon sentiment of like, oh, they're going to make money, they're going to be profitable. Those are the ones that are going to end up having trouble. So just be careful with those ones. There's definitely a lot of those that we've seen. There was news about Alibaba. Something about the U.S. intelligence found that Alibaba was leaking user data and using it to help China out. It ended up dropping Alibaba a little bit, but you can see it basically got bought up though, right? When you see these big candles here, you tend to see these big red candles, and you tend to see it move back up from there. So I would definitely say there's a solid chance we'll see this more so play out now, pop up back up to the upper side. China is going to be stimulating their economy quite soon, so consider that. Let's fix this up. Google still has these two gaps, so could see it come down to fill that. Might not, but if I were to give you a prediction on this one, oops, this one. I think we fill this gap below. That was made from Warren Buffett announcing, and probably come back to retest. I don't think we go to all-time highs extremely quickly, but I do think 300 kind of is a magnet right now that will probably hit that and come back down from it. And here's something interesting to consider. The PE ratio for Google is only at 27. Apple is sitting at 36. Meta's now down to 26. So a lot of these bigger names are actually they're going to be just fine. Money's going to come into them. Meta's looking like it wants to break down a little bit further. I did draw this where we do have another gap down below, another gap down below. It's got some gaps to fill. So worst case scenario down there. I honestly thought Meta was going to start to recover faster than this, but it got caught in some got caught in the crossfire of the entire markets. AMD bouncing around. Still got some of these gaps. Got a huge gap down low below here. Oh, and also consider this too, Oracle. Oracle's finally found a little bit of support. This big candle right here it's a good sign for Oracle. I think we could start to see some buying coming in here. Yeah, a lot of these companies they're leveraging their debt to get ready for all this data center building, but I saw an article about how there's a data center out there that can't even really open because it doesn't have enough power to run it. So energy is definitely going to be very important going into the future for these plays. Amazon back in the channel. It's come down strong, so I mean, once we see some more buying, it is at a point of control right here, but could come back down as far as 221. Yeah, 221. All right, let's peek over at what STAX has to say though today. Recently, I've been hiding the ETFs just because there's so many of them that kind of clutter in here. So we'll hide the ETFs for now. Take a peek over at what we see that might be unusual. Anything that's coming in, over and over and over. Are they buying multiple tickers or multiple positions in a ticker? Let's peek over at BMNR. Oh, that did not play out the way it broke completely down. It is at a point of control right here. Solid support right here. If it continues to break down here, this is in trouble. Bitmine Immersions is Tom Lee's company, and they're very heavily invested in Ethereum. And as you can see with this, Ethereum has struggled here. If I were to just plot them on top of each other. Oh, let's just go 3 months. 3 months. Kind of see they're moving alongside with each other. Right. So if Ethereum continues to break down further, right, it's below 3,000 right now, which is alarming as well. See Bitcoin break down, Bitmine immersions will continue to fall. This would be there. So can mark where the peaks are. So it's coming down. I already talked about SLV earlier. Silver. This is one of those. When you look at our flow scanner, you see GLD in here, you see SLV in here. Remember when we see heavy, like especially this one, GLD, they're spending $271 million on that versus the $10 million in puts. What that signifies to us is that there's a flight to safety, right? You also see Bitcoin dropping heavy, which is the risk on and the riskiest move out there. So seeing that SLV, GLD, they're just preparing that, the dollar is probably going to get devalued a little bit more, in part due to us printing more money, in part to us, making it easier, and easier monetary policy generally leads to that, and it's going to, inflate our economy, ultimately causing things like this to go up. So it's come down hard. I will say that I'm sure there are people that already bought this high over here. It did not break up above all-time highs just yet, but I think it could come back down, fill this gap, and then potentially I would say there is this uptrend that we can keep an eye on to see if it holds. Yeah, TTD, This one has turned out fairly ugly. After earnings, it dropped, came fairly far down, chopped around. It's coming right back down to retest that. I would be surprised to see it necessarily break this low. Overall, it has, markets are struggling right now, and ultimately this, if it is going to head back up, it should start to find some sort of support in these areas. Um, I would love to see this PE ratio a little bit lower at this point, but I do feel that we are in a accumulation type of zone. If you're in any sort of options, the hardest part about this is your timing. So, you know, hopefully this does start to go back up a bit more. You do have a few months for the January. Your 2027 should be fine. 2026 is starting to look just a little bit more worrisome as this goes down and it doesn't really find as much support as we would have liked it to from before. Because we're still in this range right here, right? Still have it this, but once it breaks down further, then we're talking 32 or so like that. So, right, it's where all the buyers and sellers are sitting. We do have okay, so Home Depot tomorrow, Walmart on Thursday, Target reports. So we're gonna get quite a bit of like consumer sentiment is gonna come back in. Now, I will say right now, there's this thing of how was it the top 10% of Americans are responsible for over 50% of all the spending that's happening. I'll let you tell me, is that true? Are you guys cutting back on expenses? Are you guys still going out to eat? Are you guys still um are the budgets more constraints? Do you have friends that you can talk about? Where I just saw something about how there is a worker from Meta that was just, let go, and he's got two kids, wife and two kids. His mortgage is 6K a month. He was making like a quarter mil a year, but usually he's kind of a very cocky kind of guy, and recently, with him losing his job, he doesn't know what to do because he's got maybe 3-4 months of savings, and it's hard to get a job right now, right? It's very hard to get a job. Yeah, a lot of people have been laid off. A lot of people might not have as big of a moat or as big of a fallback plan as they might have expected, which is just gonna, cut into things, right? You gotta have at least 6 months of, expenses as an emergency fund. If not, at least a year. If, in this situation, possibly up to a year would be, obviously be nice. But 6 months at the minimum for expenses, cut down on things that are, more so wants than needs. But yeah, definitely a lot of people I've heard have been laid off. Big tech, and overall, like even now as we get into holiday season, yeah, there's going to be a lot of temporary hires and things like that. But job market has been very tough in the most recent months, and specifically this year. CoreWeave has come down hard. I will say that too. CoreWeave, I expect that during NVIDIA's conference call and probably their earnings report, we might see CoreWeave get a little boost if the numbers are good. But yeah, I think it's coming back down right now with the way it's moving. There is a possibility of the start of a bit of a preliminary supply, but I think we could still see this come down towards 60 or 65. This could very possibly be something that runs back up after. Snapchat unfortunately hasn't held its move to the upside, but it kind of has this ABC pattern that I feel that we're right back at another supply area or demand area. So, I mean, I still have, nothing's changed in my chart for this. It's really just doing what the markets overall are doing. And I will say that, like, you know, part of me is like, well, if the markets just tank, obviously Snapchat's going to get taken along with it. But we are right at that inflection point of, we're going to start to see money being printed. We are going to start to see money flow back into the markets. So that could very quickly lead us into our next move up. And if Snapchat's able to give any sort of good news, I do see us moving up past $9 pretty quickly again. So if this really was super weak, we would have been back down in the $7 range right away. Okay, so I'm still holding on to my Snapchat. I don't know what you guys, again, you guys do what works for your portfolio, what works to keep your hands from shaking, what allows you to, go to sleep at night. We're going to be here presenting our theories, our thesis, our charts, everything like that. But again, if any of us had 100% certainty something was going to happen, we'd all throw all of our money into it at this point. These are all still probability plays, but Snapchat for January and Snapchat for June of next year is still looking strong. We just got to, let this play out. Same with Lyft. Lyft's come back down super hard after that move. I thought it was going to bounce a little bit higher here. It's broken right down through that area, but it still has that overall look of accumulation. Okay, but a lot of charts have started to look more bearish. There is an expectation that we could see a 30 to 40% drawdown on a lot of big names before they get snatched up. And it's just really because our economy is basically in shambles right now with everything that's happened. This trade war is affecting the US, quite extensively, and you can see that there are still a few of these, stock markets are close to all-time highs. A lot of these big names are doing quite well. But certain indicators, there's some conflicting data. I would just base it upon what I see in terms of the fear greed index. There's so much fear right now. I think that we should be seeing a strong bounce pretty soon. And another thought about it too is that the president and the people in charge, the people that have all the money, they want to see these markets keep going up. They probably will to an extent, but I'm still seeing some sort of, not necessarily a V-shaped recovery, but we will see a bounce at one of these levels I've previously drawn. Lowest end, I would say, if it drops down towards 610, you guys better start buying SPY, if anything. Put that into your retirement portfolio. Have some cash on hand. You shouldn't be fully levered in any situation. Being able and being ready to buy some of those dips. I like United Healthcare where it's at, but I will say that the volume down here has been kind of, I still think it's going to chop around in this area, especially because this is the Warren Buffett gap, right? This is where if it came back down to this range, people are going to snatch it up because they're like, well, Warren Buffett's in it. He sees something for the future for this company. The other part of it is it already filled this gap above. So a rejection from that is expected to an extent. Come back down, chop around potentially before it moves back up. Let's go take a look at what we see. UNH. Fairly indeterminate. A lot of calls have been sold off, so I don't necessarily expect any sort of big move from it just yet. The whole question mark around the whole healthcare situation, right? Is Trump necessarily going to give people a bunch of money to go buy their own healthcare instead of pouring it into these, healthcare companies and these insurance companies? Obviously, whenever you do have subsidies that are put out there, it does increase the value of a lot of these companies that are involved. It does inflate the cost of a lot of it too, because there's people trying to take advantage of that insurance and of the money, being put into it by the government. Hey, but again, we're here to watch. There's very little, unless you're a politician, you can swing the vote in a certain way. We're here just watching to see what ends up happening with it. We do see some buys of some calls for some short term. So December 5th, 325. So they're not too far away. This will probably hit that pretty quick, whether or not it holds or not. And if this is a correlated trade, if anything, they don't think it's going past 360 anytime soon, which I could say, yeah, I'd say that's probably a decent range to aim for, right? So let's see, where's my, if anything from here, aim for about right under 360, put a stop loss if it does drop below, like I say, what, 310, 309. Yeah, you get a 3. Risk reward ratio of 3. That's what you're aiming for, if anything. Okay. NBIS. It's starting to find a little bit of, possibly a little bit of a reversal. I'm not necessarily convinced just yet. I still see this big gap that it still has to fill. Yeah, they still reported a big loss. Still a long-term type of thing if you are in this NBIS. I could see it bounced because it's back to this previous high. This could be distributionary, though. I will give you that warning of at least the way this one looks. Went up here. You could make some money of it bouncing back around here, but I'm not necessarily convinced just yet that it's headed up higher, at least anytime soon. All these quantum names basically hit a distribution phase, right? Head and shoulders here. Oh, hey, it came down where I said it was going to come down. Bounced off right here, just like I said. It should hold here for a little bit, but could come back down to like 35. In terms of earnings for today, there's nothing major, but we do have Home Depot. So Home Depot, something interesting is that lumber has dropped to its lowest price in the last few years. Are people right now, as we are feeling recessionary, are people necessarily remodeling their places, buying new appliances, setting up contractors, things like that? I don't really necessarily think so. So we're going to see a lot of consumer sentiment earnings in these next few days. So low end, I would say probably around 3, probably break down to here. And yeah, worst case down to there. If it does report something good, we do possibly see this headed up, back up higher. But I don't think Home Depot we see too much. Some calls sold, more puts than calls. That's hard to say right now. We have Baidu. Now, they had a huge run up because of their AI announcement and AI play. Are they able to capitalize on it? Because that was where this run up was. We've had a bit of an ABC retracement. I think it could still come back down toward about like 110 or so. So Something like this right now. There are a few gaps down here that are the risk. Maybe probably there. PDD, Klarna. We'll see if Klarna reports a positive earnings. I would expect right now that there's more people using buy now, pay later. But okay, PDD, it's in this range. Gap above. Do we have any gaps below? Not really. So Baidu, nothing determinate. Nothing determinate. PDD. Okay. They're basically saying it should hold 130. If it doesn't hold 130, you do have some big puts taken out against it, though. But this all combined right there. They're basically expecting 135 or higher. Because all of these guys are going to lose out on their entire premium if this doesn't move to, yeah, 135, 136. That's a lot of buying right here, guys. But what I don't love about it is just these two puts that are taken. These two puts aiming for the downside probably equalize what that has to say for PDD. So yeah, there's still more puts than calls. This one's tough to say. Tomorrow before open. My charts definitely still say that it can move up from where we're at. But that flow is a little bit questionable. Here, let me look at Klarna real quick. Are they making? They're not making money. This says earnings supposed to be tomorrow, but TradingView says differently. I mean, Klarna's got to prove themselves, but just by the chart itself, shouldn't have too much further to go down if it does. Maybe peaks down below a little bit for a few days, but we'll see about that. NVIDIA. Everybody wants to know about NVIDIA. If you're a bull on NVIDIA, this is a good spot for it because it's come back down, retested. Like look at this. It's went up, shot back down, tested again, came back down. Now, the ugly part about this is it kind of has a head and shoulders. So if it does have any sort, like I think their expectation was that there's like a 7% move for this. Delete all this. 7% move for this. Today's candle is going to end up as an indecisive candle. Nobody wins out. Low volume. Personally, for the way that Jensen Huang plays it, he's great at helping people envision the future. So in terms of that side of it, probably should be bullish. Probably should see it do something to break this downtrend to head back up. However, if in the numbers, and here's the thing, we have to keep in mind a lot of these earnings are going to be plotted against previous quarters and last year's numbers in particular. And the most recently, like for example, the way I look at it is if last year in this quarter, they reported that, year over year, it was like a 70% increase. Well, now this year's quarter needs to be plotted against that increase. So chances are we probably will see a lower value or a lower report in terms of, comparatively. Now, does the market digest that positively? Does the market take it and still say, well, Nvidia is still the giant in this industry. Nvidia's you must have Nvidia chips. You should never go with, AMD or anything else that's produced. That's where the big question comes in. I feel the earnings call, if it does drop, the earnings call will help it out. There's an expectation of about like a 7% move to the upside. So right toward 200 and a 7% to the downside. I know it's tempting to play these types of earnings, but if you go peek over at Nvidia, here I'll pull up Webull for you guys right now. Let's take a look at this options chain, guys. I want to teach you guys that it's tempting to play, but you gotta keep an eye on IV. Yeah, these IV numbers, guys. Look, so let's go calls and puts. Look at these numbers. So just for this week, right? Oh, hold on. That's not even Nvidia. Why did it not pull up? There we go. Calls and puts are right at about 100% already. For an earnings situation, that's not. I expect it tomorrow to go higher. Nvidia is going to move around till then. But I mean, puts are up 50% while calls are down about 30 to 40% for today. What are they aiming for? So look at the open interest. They're aiming for Nvidia to go drop down to below 85, below 80, the big number 170 probably right here. For the calls, 210, 200 are very, very enticing there. Okay. So, I mean, like we've said, you do you. I'm not necessarily going to play Nvidia earnings. If I do, maybe see something huge come in the flow over the next few days, maybe. But I would expect the flow to be more positive here. Yeah, there's nothing that says get in on either side just yet. And we have also seen a lot of these earnings recently where it basically cuts out both sides. So it just chops around. Yeah, some more long-term stuff. So we can also go in here. We can filter and let's filter for 11/21, 2025. What are they buying for this week? More calls than puts for this. Filter for premium. Let's see if they're still in this one. So 180, 11/21. Yeah, open interest 134,000. That's this guy right here, 100,000. They're still in this one. That's nuts. They let a lot of time run off on that one. Flow over here, big money is basically saying, yeah, you should still probably see a move up. So, I do kind of like this, how it's at this level. So probably see it, retest it, maybe down and then. Like for NVIDIA bulls, there's gap right here. There's a gap right here. So if they're able to give, paint everything in a good positive light, yeah, probably to the upside. But with the way the markets are, like everything's hinging on these earnings this week. It's like everything's based upon it right now. Ooh, SPY's covered a little bit, but it's not over yet. Bitcoin, yeah, a little bit of that. Let me answer your Salesforce. I feel like you've asked about Salesforce multiple times so far. Kind of did what I said. Broke up above, chopped around, still nothing so far. This head and shoulders pattern could still play out. It could go further down, but 34 PE ratio, earnings in about 2 weeks. And I've got a couple friends that work at Salesforce, and they tend to be pretty happy people. They make good money doing what they do. Kind of have this pattern right here. Probably hear my son screaming in the background. He's been teething again, so been a little bit fussier lately. Hard part about Salesforce is I will say the flow on it tends to be very sporadic. We don't really see anything too much, right? It's, 14th, 11th, 7th. Like every week, maybe a few positions on it. I remind you guys, STAX, we specifically set up filters so it's not going to be as overwhelming as some of those other flow services. There's other flow services out there that are going to be updating every second, and you don't even have time to really catch up until you go and filter for things. So try to bring your eyes to what's actually important. It does look like there are calls being bought for CRM. So I mean, if you're bullish on it, this is kind of the area to be that. So you're at previous, right? It's bounced at this range multiple times. It's come down pretty hard into it. Candles are still kind of big, I will say that. But if it's going to bounce here, it's got to bounce here, and it's got a gap above. Now, if it breaks down below here, this trend line, and then breaks down below this other, like 230 or so, that's where you start to worry that it's coming down further. I talked about Amazon a little bit already. It's still up in this channel that I drew, the bigger channel. It's come down pretty hard, but it's been testing these all-time highs. And I will say nothing's really held these all-time highs so far. Like there isn't a single name on the Mag 7 that are still, that's not down from those tops. So Amazon down about 10% from that top. Could still see some more red to come. So, well, that's a good sign if you're bullish on Amazon. This is a 40 mil. Here, I'm gonna screenshot this for you guys. Amazon could be the bullish move coming up soon. Like, look at that. Let me grab that. Meta Wave X doesn't look as good. I originally said that after the first sell-off from earnings, I thought it was going to bounce there. It's come back down to this range that I drew. It should continue to chop around in here, but Wave X, I think we see it peak down below. We might have it come down toward this 550 range or so. There are these two giant gaps down below for it too. So that's where my question mark is it going to come back and fill those gaps? Because it's already filled this one. We do have a giant gap from that earnings. Still something great for the long run, but as of now, I think, from the tops to where we are, down 24% so far, right? So a lot of these names I think will present solid buying opportunities very soon. I would wait for, right? I would wait for another big candle to come in. Big buy. I think we see if it pushes up, you'll see a big candle come in too. Yeah, if it, right? Yeah, a lot of these names as of right now, I think are setting up, right? Like think of it as an awesome little Black Friday sale for a lot of stock names. Just be ready for those. Be ready for them. I mean, I would say maybe wouldn't be a terrible time to maybe start a position in this, but coming back down to 550, even 500, I think is still a possibility as of right now. But 500 I feel is I mean, it's going to get snatched up at that level. With Meta at a 26 PE ratio, like this company makes a lot of money, guys. The only reason this was a miss was because they had a tax bill, a one-time tax bill that they had to settle. So like next earnings, you very possibly and very likely should see all of these numbers resolve themselves. Right? Even with dude, they paid like $16 billion on a tax bill, still positive. The worry is kind of more so behind the scenes of it, of all the AI stuff that they're building is diverted through these special purpose vehicle, like other ways that they can kind of hide the money that they're spending on AI because they're investments for the future. And it's very eerie and very similar to what happened during the dot-com bubble and during the burst. So that's where I think the big risk comes for some of these names, is that Meta, Microsoft, um, Nvidia as well. There's so much money in the AI trade, and they're not exactly being fully transparent on all of it just yet. So, does it come back to bite them all in the butt, or does it, end up being a situation where those investments do pan out and they don't cause any sort of huge pullback in the stock name? That's the big question here. The AI trade I still think is valid for the future, but within the short term, because none of that infrastructure is set up and ready to be used just yet, it's very similar to all the previous bubbles that happened. Like think back about the dot-com bubble, okay? Money was going into companies like websites that didn't even really work, websites that were maybe even just a blank page, but run out of somebody's garage. And the internet's going to be the future. Internet's going to be the future, and money's just pouring into companies because they're supposed to be something great. It didn't pan out in that short term, but look at where we are today. Everybody uses the internet. The internet is such a integral part of our society right now that if AWS, Amazon Web Services, goes down for an hour or two, it feels like the world's ending. So while in 2000, the internet and the money flowing into this internet was all speculative, and it was very hopeful for the future, money is going to flow into it, and it's going to get pulled out of the names that really aren't set and the names that really aren't making anything just yet. Fast forward 10, 15, 20 years, and it still is up. Once that infrastructure has been built, once we've had the cost of computers and computing power has gone down to make it more viable for us to use the internet on a daily basis, and now we've got cell phones, and now we've got laptops for everybody. Now it ends up being a trade and ends up being an industry that simply needed time. And I bring that parallel to the same exact thing with what's going on with AI. While there's a lot of these hints as to how great AI can be and how we can use it for the future, it's not set up just yet. Man, if you guys see, like, Russia unveiled a robot that they've been working on. The thing took 5 steps on stage and stumbled and broke itself by falling over, right? We that there's that one robot that's been being advertised on social media lately of how you can have a personal assistant for $500 per month to operate in your house. That thing still needs a human operator connected through the internet to help train it to do what it needs to do. So AI isn't there just yet. But like I said, if you fast forward 10 years from now, imagine where AI can be. And another big part about that is imagine what level of chips Nvidia and AMD and these other companies, imagine what level of chips they're going to be able to make at that point, 5, 10 years from now. Imagine how much cheaper some of these current chips can be that can still do what we need them to do. In that situation, it should lower the overall cost of not only putting together data centers, but hopefully as well I do believe either we're moving directly into solar or potentially nuclear power. Obviously, there's a lot of hesitations against nuclear power, but like for example, over here at in San Diego, we have what's known as the two big boobies off the 5 highway, which were nuclear power plants. They just decommissioned them, but with the right type of maintenance, nuclear power can be extremely useful and can power much more with a smaller footprint. But obviously, the word nuclear isn't always the most um, promising word to most people. It brings, it has more negative connotations than positive in most people's eyes. And another side of that is that the main thing for nuclear power plants is that they have to be well maintained. And the issue that I would have with it is that in most situations, if a nuclear power plant were to make a lot of money, down the line, some corporation's going to come in there and try to strip it to its bare bones and minimums, kind of like what you see with like Boeing. Like Boeing used to be a great engineering company and got stripped to its bare bones because investments and financial investments took it over, corporations took it over and left it to operate on probably the lowest potential threshold, to keep it profitable, make as much money for the company as possible. And what do you see with Boeing now? Boeing's got planes falling apart all over the place and is kind of looked as like, you know, unreliable due to that. Now, if that were to happen with the nuclear situation, we very much could end up with, a bunch of nuclear power plants, but then as soon as corporations step in to take them over, then we have a lot of bigger issues because maintenance is not necessarily going to be taken care of, and we could have more disasters due to that. Okay, so a lot of things to ponder for the future, but AI and energy, data centers, these are the things for the future. And if you can get yourself into the right type of investments for a lot of these companies, you should be fairly set for the next, 10, 15, 20 years, moving forward, because those are going to be, extremely important for our futures. Okay. ExxonMobil, I feel that we might be a little early on this situation. Oh no. Yeah, this is a fine chart. This is a beautiful looking, fine looking chart. Get into this for like look at this today. Markets are struggling, right? Markets are down. Most tech is down. XOM is down what, 7% from the top? I mean, yeah. We're right here, right, guys? We see a push up to the upside, we're golden. So question is, when's that going to happen? Because I could have drawn that back here. I could have drawn that back here. I think now that it's taken some time to play out, this could be a solid chart for the future. XOM, ExxonMobil. PE ratio out of 17 is beautiful too. Give you guys this. They don't necessarily agree with me on STAX right now, but a lot of these are sells. Still buying for the long run, though. Might not see this move until beginning of next year, but I trust in my chart right now. I think it's headed up. You probably will start to see, like, if you start to see a lot of ExxonMobil calls start to come in, especially long-term stuff, that's going to confirm it. $225 is kind of far, dude. For 2026. While a sign of strength and a move up could be, I it's going to hit resistance at 150 and 200 quick. So if you see those go into the green soon, I mean that might be, take some of your profits as you go. I don't see 225 by February. That's way too high. That, like, from where we are right now, dude, that's a 95% move. ExxonMobil's not going to move that high up that fast in the matter of 3 months. So consider that. But long term, this is moving up higher. This is not, like, this was already a little bit distributionary and it got bought up. So we're headed up. Okay, 125 sounds a whole lot better. Yeah, you're fine then. 125, you're good. 225, I was saying, like, man, like, I don't need you got to have insider information to be taking that type of bet. All good. Sometimes we mistype, sometimes our fingers slip on the keyboard. I get it. Let me see. All right. I don't really have anything else for you guys today. We'll be back at it tomorrow, Tuesday, as usual. Go over what's coming up, especially some other earnings reports that are coming up this week. I know markets have been kind of rough lately. There's a lot of uncertainty in the air. I mean, whole thing, Epstein files to international issues and potentially war. Japan's bonds keep going higher. Yeah, it's interesting because for a lot of people, I think this is the first time a lot of people are truly experiencing, like, bear market sentiment, and SPY is barely down anything. But keep in mind, SPY is just a gauge of the overall market. Names such as even Meta is down 25%, right? Google's near all-time highs, but Apple's starting to come down a little bit too, over 5% down. So yeah, Oracle, that was another sign. Oracle, look at this, all-time highs down to where we are right now, down 36%. So money's flowing out. Keep an eye on Bitcoin. What I've been doing recently is I've been setting my alerts for Bitcoin at every $1,000. So this weekend, right, I'll go in here, I'll do. So if Bitcoin breaks 90K, I'll get an alert just to kind of have an idea of what the shares are doing, right? Yeah, death cross on Bitcoin, but there are previous examples where that's happened, where it actually leads into a bull market. So, Bitcoin is down from its highs, 25%. I still think we have some room for it to go down. But at the end of the day, who knows? Who knows on that? Yeah, just wait for a CNBC to put that markets in turmoil graphic up, and then it's time to buy. Yeah, see what Kramer says, do exactly the opposite. All right. We'll keep the conversation going on in our chats. Reminder for you guys, if you guys haven't already, we're doing our Black Friday sale. Doing it a little bit early so those people that want to get in it can. BF35 will get you 35% off of just about anything. A lot of people are opting for that yearly for the STAX membership, because what that does is you're basically getting 2 months for free on STAX. Then what you can do is you get another 35% off. It brings the monthly cost basis down to about like 53 or $55 a month, right? I know for some of you guys, $90 a month, $99 a month, it's pricey. It's more expensive than some people's, it's more expensive than your Netflix subscription. But probably go out and spend more than that on a single outing on just drinks. But still, go and sign up for that upgrade to your yearly so that you don't have to think about that monthly. Get all your STAX, subscriptions set in place. Keep in mind, we are also going to be we are starting to get and put a lot of our TraderLink tools into STAX. We're still working on streamlining them so they work properly. But ultimately, a lot of what's happening in TraderLink, we are moving all those tools eventually down over to STAX. The goal here is to have one platform, one STAX application that's got everything that you need on there. Okay. TraderLink still is a separate subscription. I do believe right now we're doing a sale on that. It's called Scam Seeker. You put the word Scam Seeker because there's another group out there that's basically using these tools, Gamma and Vanna and a lot of these, and they've done a great job of marketing themselves, but they are $250 a week, so they're $1,000 a month for their subscription. TraderLink is only TraderLink for the dashboard is only $100 a month. For some additional services that we offer, it can go as high as $200. If you use Scam Seeker, you can get our premium subscription for $125 for the month, or $120 for the month. So Tide, Gamma, yeah, those things. I would say follow, and when you can, go join Max on his streams. He's usually on throughout the day. He does a great job of explaining how to use those TraderLink tools. We will be in discussion over this holiday season that once the new year does start, once we start to get some of those tools in STAX, we'll be holding separate live streams and lessons and things like that for our members to understand how to use those tools. And I'm definitely going to have Max on board to help, teach us how to do those things, because it's a whole nother level. There's a lot more math involved with it, but it does help with, the scalping and the day trading that some people are interested in. I think he's been calling out stuff to the T. So, go under TG Trades, go over what he's been posting and see. Yeah, whatever we do will be recorded too, so you can always go catch up on it when you have your free time. Because I know that us carving out just an hour or two during the day, not everybody's necessarily going to be able to make it. All right, you guys, enjoy the rest of your day. We'll be back at it tomorrow. A lot of these are now being recorded. Whenever I can get Max in here to record, we'll try to post them right to directly into our YouTube. So keep an eye out. The videos channel, or if you just subscribe to our YouTube, we'll give you notifications when everything is posted. All right. Have a great rest of your guys' day. You can always DM me if you have other questions, but I'll chat with you guys later. Have a good one, guys.